the next thing we want to discuss is this very peculiar judgment is it Ntayiya? Ntayiya versus SARS, right? This is a judgment by the SCA. And it's supposed to be a judgment on understatement penalties. It was delivered last year. And I'm going to take you through the facts of this case. But as I do, I want you to just, as I read through the facts of this case, there were a million red flags that came up to me. So why is this thing in the SCA? Right, so taxpayer runs a law firm. Right, it's a separate legal entity. It seems like it was just incorporated Inc. Right, but it's not. The taxpayer here is Ntayiya. He runs a law firm, but it's a separate legal entity. So the natural person was audited for income tax 2008 to 2013. It was a bank statement audit because the taxpayer filed null returns. Right, and SARS, they said, well, there's money in your bank account. You file null returns. We all know these bank statement audits. Right, so they go and they raise the assessments. The taxpayer then objects to these assessments, properly so in terms of Section 104, at least as far as we can tell, and those are disallowed by SARS in June 2015. Right, the objection seems to have been in time. They then go and in late 2015, as all the judgment says, and file an appeal, or the court calls it an appeal. Right, this appeal, and this is where you should be raising your eyebrows from a procedural perspective. The appeal is then disallowed by SARS. Apparently, the court refers to it as an appeal. The appeal is then disallowed by SARS in terms of Section 93(1)(d) and E, saying the requirements aren't satisfied. What's wrong? If you file an appeal, the question for determination is not whether Section 93(1)(d) or E has been satisfied. The question is whether or not this, in this case, gross income is taxable or not, regardless of 93(1)(d) or E. Right? Because that's what 93(1)(a) is there for, and B and C, and D and E is for something entirely different. So I suspect, I don't know, because the judgment doesn't read very well, but because I suspect what happened is, I looked at the timing of the objection when it was disallowed. I suspect they filed a reduced assessment request because the appeals were probably late. Yeah, the court, I think what happened is the court refers to it as an appeal, but it was actually a 93(1)(d). Because SARS, in my experience, don't respond to appeals by saying 93(1)(d) and E wasn't satisfied. But here's the kicker, right? Hang on, did I duplicate the slides? Yeah. Right. The taxpayer then, when this appeal, as the court says in the SCA, or the taxpayer then launches a review application in the High Court to have the assessment set aside. Right? Breaches of Section 11.4 was a side issue that they eventually remedied. Right? But the purpose of that review application was ultimately to challenge the understatement penalty that SARS imposed in the assessment. And the judgment then, when this review application was brought, the court then says, but you must go to ADR. Now here, already, when you read this, you must go, hang on. What's going on here? Why? Because the court says, go to ADR. Right, so now let's pause there for a second. You object, the objection is disallowed. You file an appeal, which SARS then declines on the basis of 93(1)(d) and E. I suspect it was a reduced assessment request. Right, that's why SARS responded like that. And then indeed, the next step would be to launch a review application. But then the court would be entirely amiss to say to the taxpayer, go to ADR, because that's Chapter 9 process, right? So this, it seems like the two processes were entirely conflated by everyone in this process. It seems to me, just waiting for this to reconnect. It seems to me nobody really knew, to be frank, what the right procedure is and what they were doing, right? So they then go back to ADR, right? Because the court in the review application said, but you must consider ADR. So they go to ADR, and there's some adjustments in ADR. SARS reduces the penalty slightly, and then slightly, but not entirely. And it seems like nothing then happened with proceedings further, but at one point SARS took a couple of money, a couple of 1,000 rands, 100,000 rands from his personal account and froze his business account, right, as security for his debt, right? And the application that the taxpayer, because the taxpayer then goes back to the High Court. See, the procedure here is entirely conflated and entirely democrat, right? Because when SARS then freezes the money and uses his personal bank account or takes money from his account and freezes his business account, he goes back to the court, right? Which, to be fair, if SARS takes money out of your bank account, it's not something you can object to. If SARS freezes your money, it's not something you can object to, right? So that falls foul of Section 104. So, which means it falls outside of the limitation in 105, which means you can go, potentially, and challenge this in the High Court. But then the High Court will ultimately have to determine if the cause of this action by SARS, the assessments, are correct or not, right? Ultimately. So yes, you can go, and if SARS takes money out of your bank account, you can go and challenge that or have that reviewed in the High Court, right? But then if there was no challenge to the underlying assessments, and because you can't challenge in the High Court directly because of Section 105, the High Court's going to say, well, fine, look, for me to determine if SARS was correct, I need to determine if the assessments are right. And in the circumstances, taxpayer, there's no objection in front of anyone about the assessment's correctness or not. And nobody's looked at this USP and whether it's correctly imposed. The point is the court says, I can't deal with whether or not SARS's action of freezing your money and taking your money is correct without dealing with the underlying assessments, which I cannot do, right? In fact, when I look at the way you've engaged with SARS, it seems to me like you've accepted the underlying assessment SARS has raised, and absent a challenge to the USP, which there isn't, I must accept the USP is right because you did file a null return. And you're not saying that the null return is correct. And in fact, the court goes on to say that, assuming I can look at this USP, right, it seems to me that you declared null returns, right? Your sole source of income is from this practice. You are the sole director. If there were any drawings from this practice, you would have authorized it. So how can you want to say that you had no income, right? Clearly, you had income. You nevertheless filed null returns. In fact, the taxpayer wanted to say is that, because remember the court says, first of all, I can't deal with the underlying, I can't actually deal with the USP, but even if I could, it's almost as if they say, even if I could, you ought to have known that you didn't get nothing. Because you're the sole director of this practice, you would have drawn the money, you would have authorized it, you would have had to. So you can't say that you didn't know or that you relied on advice, because that was his defense, was trying to say, well, it's a bona fide inadvertent error, right? To say I relied on my advice. But of course, but then you can rely on the advice, but you can't go, the logic being, and this is something I think lots of taxpayers are guilty of, say, I know I'm making money, right? But my accountant tells me I can file a null VAT return. Or my accountant tells me that I can file a null income tax return. Yet I'm sitting with money in my bank account. I know I'm making money. So there must be some reasonable questioning of the advice, especially given this is a lawyer as well, right? So the court says no. Even if I could entertain the issue on the USP, which I can't, right? Then it certainly isn't a bona fide inadvertent error. When you look at the application that was brought, one of the things in the original application that he brought, and this is kind of where the court said, but you conceded to the adjustment SARS made. Because initially he had, in his notice of motion, as far as I can read, in other words, what he was asking the court initially for when he brought the application, he wanted the court to set aside SARS's assessments, right? And then he abandoned that and said, no, I only want the court to refund me my money that they took and release the funds of the practice. And the court said, well, when you abandoned your challenge to the underlying assessment, and there's no challenge to the USP, it follows naturally that you accepted the USP, because you can't say, I'd incorrectly declared null returns, I'm not challenging that, and there's no defense on bona fide and inadvertent error because you tried and that failed, that was woefully misdirected and inadequate. So your case must simply fail. Right. So my takeaway on this judgment is, lots of people have said this is a judgment that confirms that SARS can impose penalties, USPs, if you file a null return. There's Polish already confirmed that years ago. You can, and the legislator allows SARS to impose up to 200% penalties for the USPs for not filing null returns when you ought not to have filed null returns. I don't think this judgment is about that so much, because that is obvious. And this poor guy had no defense really on USP, right, because of a procedural issue. And the procedural issue, I think, is that there's a couple of things in this judgment where I don't think anybody understood what the correct procedure is, with all due respect to the parties involved, because the court refers to the taxpayer noting an appeal against SARS's decision to disallow an objection, right? When the court in the SCA, when it sketches the background as to what unfolded, he says that the taxpayer, when his objection was disallowed, he objected to the decision not to allow, or he appealed the decision not to allow the objection. That's not what appeals are. It's a common misconception. When I talk about an appeal in the context of Section 107 of the Tax Administration Act, it is not an appeal against a decision. That's not what it is. it's almost a post-objection objection remedy. You are simply continuing with your challenge in a slightly different forum. You're not going to ask someone to determine if SARS's decision they made an objection is wrong or right. That would be an appeal, right? But on an appeal in the general sense of the word, right? But an appeal in the strict sense of Section 107 TIA appeals, you are simply instituting your challenge again. And in fact, the rules are quite clear. It is a de novo process. It starts afresh. So it is a post-objection objection remedy. And that is important to understand because that already skews your look at the things if you got the interpretation wrong, right? My other issue is this issue that the taxpayer is complaining about, these bank statement assessments and the concomitant USP that impose, falls squarely within Section 104, right? And so Section 105 will simply oust the High Court's jurisdiction. Why this taxpayer ended up in the High Court is entirely unclear, unless what the court refers to when he says the taxpayer appealed, unless that was a request for reduced assessment in terms of Section 93D. But then, if that were the case, why would the court then refer the taxpayer back to ADR? Because that's a Chapter 9 process that should be followed, not a High Court process that should be followed. Right, and it seems to me that from a procedural perspective, that somebody conflated the TIA process and the High Court process, and it seems everybody just allowed it to unravel in that way. Because nobody, I mean, nowadays, if you were to challenge something that falls within the jurisdiction of 104, the first thing SARS will say is 105, right? Where I don't know why, who acted for SARS, who acted for the taxpayer, but it seems like it seems to me that it was a complete procedural mess, right? The end result, I think, is fair in the sense, in the circumstances of the case, but procedurally it's a mess. Substantively, the issue is, like I said before, can SARS impose a USP for submitting a null return? Yes, they can. In Polish, the court confirmed that, in fact, the legislation specifically allows and makes provision, the USP legislation specifically allows for the imposition of a penalty in the case of a null submission. The strategy to get around USP, if we ignore all the procedural issues and we deal with the substantive issue, this guy filed a null return in circumstances where he ran a practice. His sole source of income was this practice's income, and he says he didn't earn any income whatsoever, right? And then he says, well, the reason I said so on my tax return, when it turns out it's wrong, is because I relied on advice, and the court said, well, that's a bit of a stretch, right? Because you can't, and lots of people will say that. They'll say, but I relied on my advice. I think the point is that blindly relying on advice is not going to protect you against USPs. There must be an element of determining, fine, this advice that I'm getting, is it reasonable? Now, it becomes tricky. Let's say, for example, it's a VAT return, and we know there are sales, right? The taxpayer says, I know I made sales. I made a bunch of sales, hundreds of millions of rand in sales, but it's all exported. What must I do with it? You declare it on the tax return as zero-rated. I think that is because it's a zero-rated transaction, right? The taxpayer, unless this person has got some form of training, if he's got formal advice from his accountant that says, or professional that says this is a zero-rated transaction, and they declare it as such, that's different, right? But you can't just say, oh, I blindly followed the advice of my taxpayer, when clearly you ought not to have, because clearly you would know about the money that you pulled. At least that's how the judgment reads. So the point is this defense, although very valid in many instances, this defense of I relied on advice to try and get you around the USP is good and well, but it's not absolute, right? You have to actually look at the facts and say, well, what happened? And that's a common issue, I think, with people in the dispute resolution space generally, is they will make statements to rely as a defense. So they say, but I relied on advice, because they read somewhere that is a valid defense, which it is. But on its own, that sentence means nothing, right? Especially when you've got something that contradicts it. In this instance, I knew that he took the money out of the practice, right? So it is very important to substantiate your argument. Yes, relying on advice could be a defense, but then it's not absolute in and of itself. You need to justify why it is. For example, my zero rating example on the VAT.